Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Good day, Santa. Thanks for confirming. Sound. Good morning. Asian session live market analysis on March 28th, the last week of the month, between 5 and 5:30 GMT. So you know that the quarter ending will be seen in this particular week. So we could come across more aggressive moves in the market. Before that, the market might look very calm. So let us track the market using the live market quote page. I've given the link for the same. Let me also focus the camera over that of the live market quote page. Okay. Now currently Euro is trading around 1.4055, 1.4057. 1.4021 became the low, 1.4068 is the high. 31 pips negative net change is seen from that of Friday close. So there is about 30 pips, but they came down up to that of 4021 or 20. So obviously another 30 pips. They made the drop nearly about 60 pips and then subsequently gained about 30 pips. So initial stop end for the week beginning, they had done it. That is why they are holding it at a higher level. And once the volume improves, they are expected to make one more downward stop and then try to take up the market upward. So that we will be able to see during the course of the day. In the case of GBP, 1.6010, 1.6014 are the current levels. It has come to that of the psychological level. 1.6002 is the low. And it will give that uncertainty whether it will go below this like any other occasion. Then from there it will go up or straight they will go up. So, but as far as GBP is concerned, it is showing about 28 pips negative net change when compared to that of Euro. And you know that on Friday when Euro and GBP are falling, Euro was falling more when compared to that of GBP. In order to drop Euro GBP, they took it up to that of 0.88 area, made brief upward stop into 88.12 and then holding there briefly above 88 and slowly started making the slide. You come across now 3 pips negative net change in the case of Euro GBP. So that is why less negative net change in the case of GBP and more negative net change in the case of Euro. These are all the mechanism by which they handle the crosses. Then in the case of yen, after hovering around for a long time around 80, it has come to 81.74, 81.77 and 81.32 is the low, 81.77 is the high. You come across 41 pips negative positive net change. See, normally we used to see only about 10 to 12 pips or 15 pips spread between the low and the high. Now you come across nearly about 40 pips spread or 45 pips spread and 41 pips positive net change is seen. So they wanted to take up USD yen today for the month and probably they could quickly gain the levels and afterwards bring USD yen to normal trading zone or make very good volatile moves in the case of USD yen. Once they achieved that the repayment of the loans taken by the quarter ending and predominant of the loans are being repaid, then they will just try to oscillate or make volatile moves in the case of USD yen. And in the case of CHF, 0.9214, 0.9217 are the current levels, 9196 is the low, 9228 is the high. We come across a consolidation here of a narrow range of about 32 pips and 17 pips positive net change is seen. So when Euro has made about 30 pips negative net change, USD CHF has only gained about 17 pips, roughly about 50% of it. It is mainly to hold low Euro CHF at 1.2954, 1.2957, 1.2917 is the low. 4 pips negative net change is seen. So they wanted to hover around that of 29.40, 29.35 and then subsequently go above 29.54 level. So initially they are holding it lower in order to accumulate all the long liquidations, and then subsequently they are expected to take it to the higher levels. And in the case of Canadian dollar, 0.9811, 0.9815 are the current levels, 9787, 9822 are the lows and the highs, a narrow spread of about 22, that's another 15, 37 pips seen, 2 pips negative net change is seen nominally. And you would have seen that the whole of last week they have been making only a consolidation of 100 pips in this particular area of 50 pips on a daily basis, and they have bought around these levels and currently showing 2 pips negative net change and 3 pips and 0.000 negative net change in the case of Australian dollar. So they are handling the crosses a little bit. Afterwards, they wanted to take up USD CAD also to the higher levels. So we'll be surprised to see that all these denominator currencies gain first, followed by that the numerator currencies are also expected to gain aggressively during this particular week. That's what the forecast says. But we will also review it using the market reading technique in order to ascertain whether the market could make such moves as per the expectations of the forecast. Then in the case of Australian dollar, it is holding very strong 1.0258, 1.0261, and you would have seen that last week they came down to that of the week before to 0.97, as if it is going to breach the channel of upward trend afterwards taking it out. A similar move you come across in the case of Euro and GBP. They just dropped it in such a way so that the people could see that it has broken the channel and it could start making a downward move. But in the case of Australian dollar, they are able to do a knee-jerk reactions because of the lesser volume. But in the case of Euro and GBP, the volume is more, so they need to hold low and drop, and end of the week they have to make one more drop, and big beginning also a downward stop, and then subsequently if they gain, they'll be able to aggressively gain and achieve as they have done it in the case of Australian dollar for the quarter ending. So this quarter ending, they wanted to earn on the upside big move and the downside big move and again an upside big move. So by this 3 times move, they'll be able to earn substantially. And you know that they just consolidate and subsequently continuously rise or continuously drop. And you know that earlier Euro came down to that level of 1.37 and then subsequently started gaining it and went up to 1.42 area. Then from there it has made the drop, and again they wanted to take it out. And similarly in the case of GBP, they from 1.59 they took it up to 1.64 and came back to that of 1.60. These are all the aggressive moves the players do for the quarter ending. So we need to be very careful while trading during that of the quarter ending time. I explained earlier also there are seasonal trend reversal times, that is the quarter ending times, and during such seasonal ending time or quarter ending time, we will come across very aggressive moves in the market. So 4 times in a year, 3 times will be there, then the last one will be the yearly trend reversal. So when they make such moves, the first quarter move might be lesser volatile when compared to that of the mid-year. In the month of June, we will come across another big move of this nature. They could make just about 600 to 900 pips rise and the drop and the rise. They can do it very aggressively. So we should be prepared for such moves and use our trading strategy to limit the risk. And nobody will be able to see that, okay, they are dropping it and they will just turn around at this particular point or this particular level. Nobody will be in a position to say. Afterwards, we can say that it has retraced 61.8%. But before that, we will not be able to say whether the Fibonacci retracement will be to the first level, second level, third level, and things like that. So obviously, the trading strategy is the only solution for us to withstand in the market. And the players do not give the profit just like that. And that is why you come across innumerable type of analysis are happening in the market. you can just see in FX Street alone, there are so many analysts because each one is trying to identify a mechanism by which they will be able to forecast the market, at the same time trying to decide on the trading part of it. So when there are so many analysts and obviously so many type of analysis are available, you can understand that amount of uncertainty. Because of that, so many methods have been incorporated or so many methods have been derived. It's not going to be the end of it. And as we proceed in the day, we might come across more new analysts coming with newer ideas depending upon the market situations. So it is a never-ending process, reading the market. So when we are trying to read the market, I developed a method and I am trying to use it. And it may be correct or it may also go wrong. So obviously we cannot simply take the forecast alone. We have to use the market reading and we have to use the trading strategy to limit the risk and maximize the profit. So that is why I have given a written post in the blog giving the details of my trading system. So I'll give the link of it on a daily basis before that forecast post, so that those who are coming new to that of the trading and to my blog probably can read the how exactly my trading system works and then subsequently follow the forecast part of it, what I displayed on a daily basis. The market reading and the technical or the strategies are going to be constant and that they are to be deployed while using the forecast. Then the trading will be wiser. Now you come across in the case of Euro and GBP, negative net change, USD-CH, USD-Yen and USD-CH of positive net change, and Australian dollar and Canadian dollar just making negative net change, 0.0 negative net change, just hardly about 1/5 negative net change in the case of Canadian dollar, 0.0 in the case of Australian dollar. So soon they could make small swings and go up to that at the high. And what could be the expected market cost based on the algorithm? Let me go back to that of the PowerPoint presentation. And before explaining the expected market moves for today derived from that of the algorithm, I wish to state here the market timings are changed from today. So Japanese session will be from 0030 to 7 GMT. So 30 minutes short of the earlier Japanese sessions up to 7:30. Now gap time will be from 7 to 7:30 GMT. Then European session will start by 7:30 GMT to 13 GMT. Then as usual gap time will be 13 to 30 GMT because 2 weeks before daylight saving system has been incorporated in US, but from yesterday the daylight saving system is incorporated in Euro. So in the market from today onwards you will come across the timing gets changed. Then US session will be from 13:30 to 20:30 GMT, 20:30 GMT to 0030 GMT of next day will be the gap time. So the gap time moves are false move, and so you can understand they have to necessarily make a false move in order to make their intentional move during that of the session start time. So read carefully the market and then synchronize with that of the forecast, whether the forecast is happening or the market is deviating from there on a day or two. Sometimes the market might deviate because of the variations in the volume, and suddenly there might be a data release. Say for example in this week you come across non-farm payroll will be released on 1st of April. So suddenly the volume might dry even though we expect a very high volatile moves in the market. When the volume dries, there is no point in making volatile moves in the market by the other players. Only towards close or before the data release time or the day of data release, the players might bring in some volatility in order to attract the traders. So these are all the type of variations or deviations you could come across from that of the forecast. The forecast algorithm, I have been using it for the past 15 years and displaying it in FX Street for the past 12 years. So you should be able to understand that it is time tested to a greater extent. I have brought in a lot of modifications in order to fine tune, but still when the market shows changes, then I also become surprised and I try to see what sort of other changes I could bring it in the forecast so that I'll be able to fine tune it to the greater extent. So you have to understand it is in the learning process and it is in the evolving condition. So you should be able to appreciate. So after the complete development, if I try to present it, that day may not come at all because it is a changing market. So obviously you come across the players also change their strategies, the traders also change their strategy. So in such a dynamic condition, I have to develop a methodology or an algorithm by which I should be able to give the forecast to a greater extent. That is my objective. I am trying to do it as much as possible. Now with regard to that of the expected market moves for today, during Japanese session, swings could be seen. A nominal swing between low and high could be seen, and probably you may not come across a big spread between that of the initial lows and the highs. Then during European session, there could be a dip during early European session, and after that, you know pretty well that when they make a downward stoppment, they make a rise. And if they make the downward stoppment and they don't come above that of the initial low for more than 30 minutes, then understand the rise is invalidated. I explained it many times, still I am giving it. Because there we use that market reading to confirm whether the rise is going to happen. If they make a stoppment or a false move, then the rise potency is still seen. If they make simply a drop and hold below that of the initial low for more than 30 minutes, then we wait for 2 hours to see whether they are able to rise it or stop cutting the low. In case if they don't stop cutting the low and continue to cut the low, then we know that it is more than 2 hours. That means for 2 sessions they are going to bring in the trend, bring in the intentional move on the downside. Then we don't take any positions. We simply hedge the market and position and see whether we will be able to book profit in the hedging. I explained the trading strategy using the hedging or using the stop. Also in the post what I have given it in the blog. Now on Sunday I have taken time to present it as a consolidated post so that the sequence could be understood, because I gave in the form of 10 webinars explaining all the details, but still people found it difficult to understand. So I made it as a summary in one single blog. And again there are questions asked with regard to position trading. So probably I'll do that when I get the free time. So please understand that my time is also limited. See, I am willing to help, but not sacrificing my life. Okay, I am willing to help without compromising with regard to my personal work and also my personal task. No, you should be able to understand. Then, US session, there could be a swing and rise move. So that particular swing again may be in the lower level or in the middle level. Then the rise could be very significant. And if they rise significantly after making brief downward stop and then you could come across the continuation of the rise on tomorrow as well. And as for the forecast, 29th tomorrow, you could come across upward gap opening and further rise with little bit of volatile moves during the European session. And Wednesday, you could come across one-sided rise, not the midweek either way stop and volatile moves, but they are expected to gain aggressively on Wednesday. Then Thursday, that is 31st, you could come across sudden drop in the market during that of the Japanese session and a sudden rise during that of the US session. These are all the expected moves for the month end. And on first, that will be the first day of April, but it falls in the same month. And that non-farm payroll is going to be announced during that particular time. the market could show a drop before that of the non-farm payroll and then gain quickly after the non-farm payroll, but during your session they are expected to make further drop, and from there you could come across the market dropping some more. Probably you will come across on fourth week beginning false move as a rise, and then followed by that drop in the case of Euro and GBP. So I'm not biased that Euro and GBP have to rise and I am having a sentimental attachment and things like that. I am giving all these things based on my algorithm, because once I developed the algorithm, I can only explain the algorithm, explain the outcome of the algorithm in the blog post. And the trend reversal is expected to happen during this particular week. And last week the drop has happened. I was able to understand to a certain extent that before making a drop, the players have lightened their positions. So they have been accumulating the positions at a lower level around 1.3035 or 37 levels in the case of Euro, and GBP again 1.596061 and things like that. They just offloaded it. But in the case of GBP, they have not taken much of a position. It shows very clearly, because from 1.60 they just took it up to 1.64 and dropped. Whereas in the case of Euro, they gained nearly about 1,000 pips. So now they are just booked a profit with a higher volume, and quickly they could make the rise in this particular week. And those rises may not sustain. So you should be able to understand, when they don't sustain those rises, we know that they just quickly make an upward stop and quickly exit out of the long and also build sell positions. Now still they are not build the sell position. That is why they are supporting at these levels currently. And the next gain they will try to build sell position. And it is very similar to the Australian dollar. So now in the case of Australian dollar, can anybody short it here? Nobody will have the mindset to short it. 1.02 area, 0258, currently it is trading. And nobody will have the mindset to short it, because they simply hold it. And that is a scenario you could come across in the case of Euro and GBP. They will simply gain the levels and hold it around that of the recent highs and induce the traders, tell the traders, come on, you sell that stock, or you sell the positions, we will absorb it. That is how they create it. But actually what they do is, they do the circular trades. They just liquidate their long positions and build sell positions, holding at a higher level. See, that I explained it again earlier. They keep the buy orders and keep the sell order. If the traders don't take the sell order, they just buy it by themselves and keep a higher level buy order and keep another higher level sell order. And when the traders keep below their higher level buy orders, some more buy orders, they remove their buy order and just sell it to that of the traders. And again keep a higher level buy order and hold the market. So this is how they do the strategy, and at that time we may become bullish and draw theoretically or using the chart for the highs. Then suddenly they make the drop. So this is what anticipated in this particular market. Now quarter ending time and also the new quarter beginning time, the market is expected to make aggressive volatile moves in the trend reversal time. So trade with care. That's what I can advise. Now with regard to the initial lows and the highs, Euro formed the low 1.4021, the high was 1.4068. Both of them are not breached. GBP 1.6002, 1.60026, both are not breached. You can understand how they are simply holding it without making any move. Then in the case of CHF, 0.9196 is the low, 0.9228 is the high, and they are not breached it yet. And so that means that the traders have become nervous and they are not committing positions. They do not know whether we can take a buy position or further drop could be seen and then we'll try to take a buy position, or it is too low to go in for a sell level. So that's how the uncertainty is being created. And in the case of yen, 81.32 and 81.95, They just breached the high in the case of yen, as I explained, that they have just shown 41 pips positive net change. Now they have made 50 pips positive net change. 81.85 has become the 95 has become the high. So 30 pips above, they have just taken it. And you know that at the time of intervention story, yen came up to that of 82. Then from there, 80.50, it came down to, again it is reaching 82. So players wanted to rise, but actually before that, they just made the drop and induced the long holders who have been holding it to liquidate and then subsequently gain the levels. This is what I read and give it in my forecast on a weekly basis. But people think that, okay, your level is not achieved and it's not happening and things like that. So my reading can also go wrong. It's not something gospel truth. So you have to keep it in mind. Then Australian dollar 1.0228 is the low and 1.0265 is the high. They are not breached high or the low. Only in the case of yen they breach the high. They intend to gain the levels in the case of yen to start with, and also you find in the case of euro yen and GBP yen they are showing nominal positive net change and they could aggressively gain the levels there. So if they make a small dip in the case of yen crosses, one can take a buy position there. How they do it? They gain the level in USD yen and drop euro and GBP so that the yen crosses will make a drop, but subsequently they will rise euro and GBP and also hold USD yen and gain further up. Then you'll find the yen crosses gaining. But they are doing it for the week beginning, so they could make again a drop in the case of yen crosses during the midweek. So keep that in mind, because there again they wanted to earn. They don't spare any currency pair, and they try to bring in volatile move in all currency pairs and earn money. So don't become simply bullish and simply take the position without any risk limiting factor. Once the position makes profit, try to grab it during the trend reversal time. I have been explaining many times, don't try to do position trade, because they may make aggressive upward and the downward move, and your position trading may lead to that of holding the position for a longer time without much profit. Then USD CAD 0.9785 is the low, 9822 is the high. They are not breached it. So it is going to be an story today. So they could bring in some good moves in the case of yen. Watch it and try to take either positions in yen. When they make a quick drop, take a buy. When they make a quick rise, you just book profit. Stock trade you can think of. Let me minimize the PowerPoint presentation and take up the questions which are asked in the hotcom window. I'll meanwhile focus the camera over that of the live market quote page. There are so many questions. Then Matthew, will there be more drop in the case of euro and GBP as a false move from when it? Yeah, that's what on Friday also you asked Matthew the question during tracking the market together with. I said that Friday European session there could be a false dip. So we could see during the European session, early European session, some drop, probably some stop and below that of the low. So we have to see either in euro or in GBP they try to do it. They may not do it in all pairs, I suppose. Then Robert, what is your expectations of euro for the rest of the Japanese session? They are expected to only make swings now, not big moves. In the European session, when the volume improves, they could bring in some action. Do you expect it to go lower first, then higher, or more higher than? Yeah, they are expected to go lower and then come to higher levels, because big beginning false move normally be the continuation of the trend what they have set during the earlier week, so that the people will think that it is a continuous fall and liquidate. Even those who have been holding the position overnight or over the weekend will try to liquidate out of fear. Then they take it up. What level could we expect it to? Level is extremely difficult to estimate. See, they came down to 1.4021. Okay, is it difficult for them to go to 1.39? or below that of 1.40? Not at all, but they want to see where the stops are. If the stops are below that, they might take it up. And if the stops are below 1.4021, they may just do a 5 pips dip and then go up. Then Robert, do you expect a lower drop in European session below the low? Yes, there is a potential for euro. Yes. Why do you say aggressive moves when the monthly net change are still within the net change firms? See, aggressive moves are not necessarily a one-sided rise like 1000 pips and 1000 pips drop. Aggressive moves are nothing but the quick moves. They can rise 300-400 pips and drop 300-400 pips. And with lame excuses. And again rise about 700 pips and drop about 400 pips. Is it not aggressive? You can use any terminology for that. But ultimately, I wanted to explain that this is the type of move they wanted to do it. Robert, how low do you expect euro to go this week? And when do you expect it to firm up? That is what week beginning false move could be seen, and again tomorrow they could bring in some good rise, and Wednesday they could make further rise, and Thursday, that is the last day of the month, they could bring in some volatile moves. Then Friday, before the non-farm payroll, they could gain all the levels and then drop. Where can we read your blog? Oh God. It is there in FX Street, Robert. Market reading it is. The link is given in the home page itself. Otherwise, you can just click technicals and then you find under that subheading blog. If you click blog, then it will show all the blogs which are being given in FX Street, and you can choose all the blogs one by one and read all the content. I suggest that you read all the blogs so that you'll have an overall picture, so you don't become biased with one blog. That is why I find that many of the people who just read one blog and think that the market could move as per my expectations. I'm using the word maybe only. I don't know. Still, it is not being perceived properly. So euro and GBP could swing, may swing and rise. That means what? So you should be able to understand a possibility. But still, they read it as a strong statement and they take the buy position. Later on, when the market goes against, immediately they start blaming me. I only used may, and when I use may, only a certain degree of accuracy, it could go up. So I don't know how to explain all those things. Then Robert, for GBP, what do you expect in European session? Do you expect a drop below that seen in Japanese session? That's what Robert I said. There will be a stop and below that of the low, a dip is expected during early European session. The chart of the change in times for the session European gap time and gap time could not be seen. Could you please repeat the near time more? Yeah, I'll show the slide again. And in fact, I had given those timings in the blog. The new timings I have given in the blog. Anyhow, I'll display the slide. You can make a note of it, or you can quickly take a screenshot. Know that once you print screen, if you press, it will be just saved, and from there you can note down and just delete it. Matthew, my trading system webinar is not opening in the FX Street. I don't know what is the real problem, because just even yesterday I clicked all the 10 links and they are all opening. See, they will open only a page, and then you have to click there the triangle mark showing that to start the webinar. You have to click that. Only then the webinar will start. Then Devangam, how can it gap open tomorrow when it's a continuous market? See, gap opening, you know that when there is a gap time between the US session and the Japanese session around 4 hours, and during that particular time, you come across the gap opening. Quickly during the gap time, they could gain the lines and gain the levels, and also during the start of the session, Japanese session. Yeah, it is a 24 hours continuous market, but the traders do not participate in all 24 hours. You might be aware of it. Aggressive trend reversal, volatile moves mean will euro drop this weekend? See, aggressive moves means either way. So they could quickly gain about 300 pips and drop about 300 pips or 200 pips, and then gain about 700 pips and drop about 400 pips. They are all aggressive moves. Is there any change of going 1.4363 area? Yeah, they are expected to visit those areas before making a drop, and we could come across they hold these levels and induce the traders to do the short covering during this particular week, like what they are doing it in the case of Australian dollar. And nobody thought that Australian dollar they will hold it so firm. And similar moves they had done it in the case of Euro and GBP in 2008. Any level you sell, they will absorb it. That's how they have done it. So the players have got the capabilities of doing it. In the gold last week, they had done it like that around 1450. They have been simply holding it. And now in the case of crude 105, they are holding it. And in 38 level silver, they have been holding it. So that is how they just hold it, like what they are. See, throughout the day, you will find that they are holding like this. Then traders will simply lose the patience, and those who have gone short will do the short covering. So they have the various methods of just testing the patience of the traders. Yeah, I will show that. Vishnu, what do you expect in the case of INR? INR is expected to weaken next month. Then Kannan. Aussie dollar will go up crossing. Yeah, they could gain, but if you try to take a buy here, you may not earn much. But if you take a sell, you will not see profit. That is how they will hold it. So instead, when they are in extreme level, avoid taking positions. When they bring in some volatility, then try to do trades. So simply just because they are holding it, if you sell it, you may hardly book about 5 to 10 cents profit. So instead of spending time in holding the positions for a long time, try to choose a currency which has got a good spread between the low and the high. That will give you the swing trade possibilities. I've been repeating it during every webinar this, and again the questions are asked. So I think that I'm not emphatic enough to make the people to understand that how to choose a currency. USDN will rise from here to 83. Yeah, there is a great potential. Yeah, session timings, I'll show it again. Then rather. GBP Australian dollar cross has dropped about 900 pips in the last year. Obviously, they had just dropped the numerator GBP and raised Australian dollar. So you will come across that denominator currency has become very strong, so the drop has to happen. Is this likely to continue this week as well? See, it is similar to that of trading in Australian dollar. So they will hold it, and when they have dropped 900 pips, they will hold it. How they have done it in the case of USD CHF and USD Yen, they dropped and they have been holding it for several days. If you try to take a buy, they will not show you profit. And simply hold it, and those who are holding higher level long position, they will induce them to liquidate the long, losing the patience. Then only they will rise it. This is the problem with regard to trading in crosses. I explained many times they can do one-sided move and hold it. If you have got the capacity to hold the position with regard to the equity and also the patience, then probably you can take positions in such crosses. Then Kannan, how will they know where the stops are? Okay. See, they have got a very close connection with the interbank treasury, sir. This is the link. Okay, Ram has given the link. Then NASCO. Do you think Australian dollar is close to peak? Yes, it is close to peak. They can go to 1.03 or 0.350 or things like that. Slowly they will form up and induce the traders to liquidate, do the short covering and then build the sell positions. You could come across a massive drop in the case of Australian dollar after that. And when from this level, when it is making a drop, don't buy. They will continuously drop. They will not swing. Then please show the change. Okay. Then mid-drive has already given the timings here. Anyhow, I'll show the slide. Repeat what you can expect in euro. See, euro is expected to make a move at least to that of the low during that of the early European session or a brief downward stop if needed. Then subsequently they are expected to gain the levels. Already they are very close to that of low in the case of GBP. They came closer to 1.6002 and then went up. And if they cut the high in the case of GBP and stay there, then they may not do a downward stop. See, the net change in the case of GBP is 25 pips negative and euro is 31 pips negative. So that means that they had done already that downward move in the case of GBP and they wanted to hold high GBP above that of the initial high and they wanted to make a drop in the case of euro. If you continuously watch these net changes from every 30 minutes and things like that, you'll be able to easily understand which one they are going to do the stop and which one they are not going to do it. I explained it openly, but still, because of the tension of holding position and which is creating so much of uncertainty, you fail to use your mind and you ask somebody to think on your behalf. So I think you have to develop the tendency to control your emotions and focus more on your market reading. See, whatever be the type of analysis, if you are under the grip of emotions, no analysis you will be able to make use of in your trading decisions. So controlling the emotions is the most important thing. The best way to control emotions is to drink water. To avoid becoming emotion, you take very less positions so that you don't become emotional at all. When you become emotional, then a large chunk of usable margin is eroded. How it erodes? You take many positions and all positions take away the usable margin from your equity. So take only one position at a time. Then probably it can just erode about $50 or $100 if it is a mini lot, or about $500 to $1,000 if it is a standard lot. And when you hold less than $30,000, I explained that you better go in for only mini lot trade. If it is more than $30,000, go in for a standard lot trade. Then you will not be under the grip of emotions. If you take only one position and take a determination, okay, let me book profit in this position, then I think of another position. After blowing 2-3 accounts, if you develop it also, still it is fine. You will be able to earn back. Then Jan Poco. Euro GBP direction. Euro GBP is expected to make the drop. You find that net changes are showing that. And already it is a negative net change because last week they induced all the traders holding short positions to do the short covering around 0.88 and now they could make a drop, but doesn't mean that continuously they will make a drop here. So once they stop cutting the low or breach the low and continue downward and stop cutting the low for 30 minutes to 2 hours in a mid session, you have to close your short. Then go again short when they are near the high next day. That should be the approach because many people take the position and become possessive of the position and they see very good profit and later on they see that it becomes a loss-making position. You should get rid of such trading strategies. That means laziness. You are not able to apply your mind and quickly grab the profit. Then mind become lazy or there is a mental block. Because of that you are not able to act quickly. How about USD/CHF? USD/CHF, they gained 20 pips now. when euro is making 31 pips negative net change, and you know that they have been holding above that of the last week high, and they are expected to gain the levels again here, and any small dip you can take a buy. And whenever they gain during the week beginning, they gain at least 100 pips. In the case of USD Anurag, till which date will the time applicable? So as long as the daylight saving system is on till October, it will be the applicable date. I explained it in my trading system. All the timings I explained it. So that shows that whatever you read, you are not retaining it. What is the second week of April? You are expecting euro. Yeah, euro and GBP are expected to drop. But the drop may not be visible so easily. Like how the rise is not visible, the drop will not be visible so easily, but they will make the drop. So let me go back to that of the PowerPoint presentation. So people have asked about the timings. Hope you are able to see the timings. Okay. Now Japanese session 0030 to 7 GMT. So earlier it was up to 7:30 GMT. Now it is 7 GMT. Then 7 to 7:30 will be the gap 10. European session will start 7:30 GMT instead of 8 GMT. And US session already the change has been incorporated. Same 13:30 to 20:30 GMT. Hope you are able to take a screenshot or note down the timings. I'll again repeat it in the blog for the benefit of those who have not attended this particular webinar. Now, with regard to expected market move, Japanese session subdued swings between the high and the low, excepting USD yen. Nowhere you find that high or low has been breached. Then a quick dip might happen in the case of euro, and may or may not in the case of GBP, let us see. And then a rise during that of the European session. US session, swing and rise moves could be seen. So during the European session, when they make a dip below that of the initial low, watch. After forming a new low, if they don't cut the new low for 10 minutes, understand it is going to be a stop and then you will find slowly they will gain the level up to that of the initial low and stay above that of the initial low in less than 30 minutes. So you confirm it every time that new low after 10 minutes, if they stop cutting it, it will be a stop and only. Then you can try to take position during the stop and still our reading can go wrong. So use a tight stop of 10 pips also. Just take a chance. And once the position makes profit, keep stop at entry. And once they go above that of the initial low and go up, then make it as a trailing stop. And once they come to that of the high, that will be our first profit taking level. They breach and go above that of the initial high, then understand they could make an extended move or an intentional move. So intentional extended is for 2 hours. If they continue to rise after 2 hours, that means it is an intentional move. Then happily wait till end of the US session and try to book profit. So this is how you can maximize the profit. Hope you are able to understand. So only in the case of USD yen, they breached the high, but all other currencies you have not seen the high and the low or breach. So they could make only swings during the Japanese session, and when euro and GBP are making nominal dip, they could gain the levels in the case of USD yen, so that euro yen and GBP yen may not make further drop, and they could take up further up the yen crosses today. So I take this opportunity to thank everybody who have come here to listen to my webinar, and I'll again come back tomorrow and give you yet another session of Asian session live market analysis. And any doubt with regard to the trading strategy, I request you to go through the blog and read all the trading strategies given there in yesterday's blog. And if you're still not able to understand, you try to go through my trading system webinars. See, the purpose of being recording it and keep it for your review is mainly uh, to avoid me repeating it again and again, and any newcomers, because we don't expect everybody to join like a classroom. So anybody who comes to that of forex trading can go through that my trading system. In case if they find it is a useful system of trading, then still you have doubt, then you can ask me in the blog. So again I'll repeat, the forecast what I display in the blog is only one component of my trading system. So you can give only 1/3 weightage for that. Another 1/3 weightage is for the market reading. The third 1/3 weightage should be given to that of the trading strategies. Thank you one and all. See you again tomorrow.